Good morning, and thanks so much for tuning in to Stocks to Watch on BloombergQuint. I'm Mathew. The cues are positive going into trade today, so let's see if we can build on the gains that we've seen in the first two sessions of the trading week. My guest today is Gurmeet Chadha of Complete Circle Consultants. Good morning, Gurmeet, and thanks so much for joining me this morning. I have three key focus points today, but if time permits, hopefully, I can ask you a bonus question as well. So I'm going to launch straight into the first one, which is ICICI Bank. And I understand that the transaction that they will get into to sell that 2% stake in ICICI Securities is not going to be a very large one. It's just about a 310 crore transaction at the floor price of 440 rupees per share. But it gives me an opportunity to ask you what your view of this particular bank is. It has gained significantly in the recent past. Are you comfortable with the valuations as they stand right now? And that 310 crores is nothing to scoff at. It's money in the bank, literally. So how do you rate ICICI Bank?
Good morning, Alex. I think I've been constructive on ICICI Bank now for a while. I think clearly doubled from the March lows. If you look at, I think it was 250 odd, if I remember correctly. So you're right. I think this is more to do with the public holding of 25% for ICICI Securities. ICICI Security IPO came in March 2018. So they offloaded 2% in August, and I think the balance 2.2% is to meet that. Even if you see, despite this, transaction, their CET post the capital raise in August already is above 15.5, which is comfortable. I was quite impressed with the virtual analyst meet they did some time back, showcasing the digital abilities, focusing on the key growth drivers. What I was more impressed was the way their business banking and rural banking initiatives are panning out. Business banking, they've also gained market share in trade and FX. They are offering complete supply chain solutions, a lot of solutions for startups and on trade finance as well. CASA, again, best in the category. I always say that always look at the liability side. Don't just focus on the loan side alone. That's 44%. Lowest cost of funds, almost 4.2%. Also, that's concentration in corporate loan book. If you see the top 20 accounts are not just like 10.5% of the loan book. So I'm seeing the valuations are reasonable, subsidies are doing well, still at about, let's say, about around 2 times per book. So continue to remain constructive, but if there's any correction, obviously that could be, more helpful in adding more to it.
Understood. So buy on dips is the view on ICICI as it stands right now, which brings me to JSW Steel. And there has been quite a bit of buzz and commentary on steel stocks in the recent past because of the strength that you've seen globally, not just in India, on steel prices, on the prices front. But the latest update from JSW Steel has to do with their production. They've said that production in November was at 13.3 lakh tons, which shows a growth of 3% year on year. That's constructive already. They've said that average capacity utilization was 89%, but the caveat that they stated was that a shortage of iron ore remained a constraint in November, Gurmeet, to achieve that higher capacity utilization. Do you think that that's something that is transitory and can get fixed very quickly, considering the developments that we've seen on the mines front in the recent past?
You're Alex. I think in commodities we have to get the cycle right. I think we are probably getting to the probably one of the better cycles we have seen in steel and in a lot of building material for that matter after a long time. So if you see their numbers, they did about 4.1 million metric tons. The realizations were much better. So top line, EBITDA, PAT, all reported great numbers. Around 10,500 per ton, if I remember correctly. We had probably 3 steel price hike between November and December. So obviously these realizations are going to improve. What I'm more interested in from a, let's say, a medium-term perspective is some of the growth levers. So look at their Dolby plant. I think they're likely to double capacity probably by the end of this year from almost 5 to 10 million tons. A lot of their cost-saving initiatives, the color coating line, the pellet plant, where they're adding about 8 MTPA. The coke, so a lot of cost saving initiatives they are doing. Also, I think the net debt to EBITDA is now 1.4, 1.5 times, which has always been a bit of a concern. I would just want to watch out if they go out of the way in terms of the Bhushan Power acquisition, which is lined up, considering the 50-50 JV. But given a choice, I will prefer Tata Steel over JSW Steel. Let's say if I want to be tactical on steel, there I see probably both financial and operating leverage playing out, and probably a better turnaround story.
Understood. All right. So we've already discussed four stocks. Let's go into the last group of stocks, which Gurmeet, a lot of jokes have been cracked about the PSU banking space. But let's leave that aside and let's talk about yesterday's performance. Over 7% for the index as a whole, and for the month so far, rather for the last month or so, the gains are about 35%. So what's really brewing in the PSU banking space? It has been a laggard for so long. So people perhaps are a little wary when they see gains in these stocks.
They have reasons to be, Alex, and I think one has to tread carefully. I don't know if you recollect, we had a one-day surge after the bank recap news a couple of years back, and we saw a big surge for 2 days. So I'm saying one has to be careful. I don't think so. The worst is behind us. But if I were to pick, my in PSU banks, I would still go with SBI. If you see their collection efficiencies, they are almost back at 97%, almost close to the private banking peers. This is the only bank, Alex, which has gained market share. So look at, for example, in loans, right? In PSUs, I'm saying. So they had a 21%, they had a 19% loan share in 2015. We are at about 21.5%. Deposits now they are at 24%, another almost 200 basis points, despite being the lowest rates on savings account at 2.7%. Their indication on that overall loan book impact being 2.4%, roughly about 60,000 crores, is looking a little believable to me. And if they can, manage, credit costs better, we'll see how it pans out the next 2 quarters. But looks like their guidance looks probably for the first time you're probably likely to be close to it. Also, I think if you see the SMA1, SMA2 level book, that's shown, that incremental slippages, the concern on incremental slippages may not be as high as we feared it would be. The PCR of about 88% gives you some comfort that credit cost hopefully will normalize next year. So I think if I would, and all subsidiaries are doing well. Just look at SBI Life, ROEV of 20% plus, SBI Mutual Fund being number one, SBI Cards market share at 18%, right? So I think at less than one book value, I still think that's one of the best PSU banks to play with. Maybe Bank of Baroda at 0.4 book value, but I would like to watch the credit quality there.
Absolutely. Which brings me to my bonus question, and this necessarily has to be a short answer. DMart, after the gain yesterday, Gurmeet's 5% gains. I think there's only one brokerage out there whose target price has not been breached. So how does one play this stock? Would you say that you can still buy it? Do you hold on to it? Do you book profits considering that all those targets have been hit?
I won't buy it, Alex, at this price. I think it just looks, far too stretched to me. But we've been wrong on DMart most of the times. It's like Tesla, right? We always get it wrong, despite the valuation. So I would avoid. I think consumption, there are better plays. Look for more, while not strictly comparable apples to apples, but players like Tata Consumer, Dabur, they offer much better consumption play, from a medium term perspective.
Understood. I'll get more on that later, but thanks so much for joining me this morning, Gurmeet. It's been a pleasure as always. And to you, dear viewer, thank you so much for tuning in to Stocks to Watch. You got a bonus answer today. I hope that's useful to you. Do stay tuned. There's a lot more coming up on BloombergQuint.